Hello everyone, this is Norman Howlett from thedisciplinedtrader.com and simpletradingplans.com, and I wanted to show you a trade I just started to get involved in yesterday, and I want to show you the reasons why I'm getting involved in it. And but whatever my reasons are, they shouldn't be your reasons. There's risk in this trade, but I think there's tremendous reward potential in a trade like this. It's working with really a daily chart. But I want to stress again that the important thing to disciplined trading is to make sure that you are committed to the trade for your own particular reasons. I'm going to give you my reasons why I like this trade as we go along. But don't just take my reasons. Again, do your own research, do your own due diligence on this trade, and see if it's something that you may want to try to take advantage of if and when it does occur. What you're looking at is a seasonal trading pattern for corn. And every summer I take a look around this time of the year, a little bit earlier, I kind of take a look for, especially the last couple of years, for bottoms to be made in corn and looking for drought. A drought in the summertime can be devastating for crops and really drive prices higher. But that's really a counterintuitive position. If you look at this chart, you'll see that generally the highs occur in the month of June over the years. And generally you see a depression of price over the course of the summer, leading to some flatness and then a rally from about November on to eventual June highs. That's if you look 20, 30 years back. But I think you got to look a little bit closer at this, and let me show you what I mean. If you look at, say, the last 4 years, here's a chart of corn. This is we're looking now at the September contract because that's the one I'm getting into, the September contract in corn, and I'm going to show you wheat in a second. But here you see that in this year, in 2000, this is the 2010 chart of corn. You see that we made a low right about July 1st, and it was up and away after that. So this was a chart that was counter to what happened over the last 20 or 30 years. Here's corn for 2011, the September contract, and again you see the low happening just about at the same time, although you had a nice up movement. These were big years for the grains in 2010, 2011, and 12, but you did see a nice up movement through that year. Through the next couple of months to the expiration of the September contract. And if you look at 2012, this was a huge upward move, market move, literally in the summertime from what was $6 in June all the way to had a $2 move. It's a 33% move, literally in a 2 or 3 week period. Now you can't expect that to happen every year, but it just shows you that even though you're looking at seasonal tendencies in general, the last several years, I just showed you 2010, 11, 12, and here's 2013, where it didn't happen. Those people who bought just looking for every June 1st to buy, they saw a little happiness there until they were taken out, probably stopped out as this market moved 20% or 15, 20% lower in price. So it's not going to happen every year. But these are tendencies. So the tendency really for corn and the grains really is kind of sideways to low if you look over a broad period, but the last few years gives you some idea that maybe things like global warming and etc., El Nino, etc., may be affecting things so that we have a reasonable probability from a general standpoint to want to look to the long side and maybe take advantage of what I believe. I'm a believer in looking for tremendous events to happen. Now, in the summer, you got to look for droughts. In the winter, you look for freezes. In the et cetera, in different markets. Now, it's as I've shown you over the very long term, it's counterintuitive in corn, but the last few years have shown that counterintuitive nature to pay off. I mean, what's counterintuitive is the actual move. You would think that every summer things heat up, you're going to get drought, and the price will go up. Doesn't normally happen, but it has been true, as I've shown you, in the last 4 out of 5 years. Now, if we take a closer look at what's going on right now, here is a current corn chart. This is the September corn contract, and you can see that it's since April of this year, it's been, it's flattened out, showed you double top, and then came down and is matching the yearly low, which happened in January. That's right at the turn of 2014. And right here, I'm seeing action here that makes me want to think this may be a good time to get in the long term. And this is what I'm showing you. Let's take a closer look. I'm sorry for all the blinking on the chart, but I'm kind of whipping this together. If you want to, let's say we want to draw a trend line, just to give us some simple mechanics here. If you take it now, where do you take it? From here? From here? I think you take it from here. And where do you do it at the top here? I take it from the highest point available there. If you take that, I don't know why we didn't get a line. Let's try that again. So if we start here and we go here, well, maybe I have to learn how to draw lines. I'm a little bit new to TradeStation, even though I love it. But let's try it one more time, and I think you'll get the idea. Okay, success. And you see that if we had drawn this line from any other point, even if we took it from this high and drew it, you would have been through. We would have in a breakout mode right here. But for those people in simple trading plans, you see this pattern. This is a pattern that I like. You've seen it before. I've called it the modified engulfing pattern. But it's a very nice pattern to play off of. And as you can see, we've got a lot of room here to cover. 447 all the way to 512. You're looking at about a 60-cent move. It's about a $3,000. I'm sorry, 60 cents. Yeah, 60 cents is about $3,000, 50 cents a point in a regular size corn contract. What I love about this is everybody out there with very small accounts, there are 1/5 size corn contracts where each penny is worth $10. So you've got a lot of move from 144 to 147 to 148. We're at 147 right now. This is a live chart. 147, 447 to 448. That is it's a $10 move in a mini contract. For the regular corn contract, it is it's a $50 move. So you've got a lot of potential here. Now you've also got you've got some risk, and here is the risk right here. The low of is 431 right here. So you've got to put your stop somewhere in the 430 area. But if you're looking here at a long-term trade with a lot of potential, I like the idea of what I'm seeing here. I'm seeing, again, this is coming off a bottom that it did not break, but almost matched. You've got a seasonal, or the last 3 out of 4 years, where you've seen corn take off right at the July 1st area, or a lot of people may be waiting for July 1st and may leave them behind. This thing may come back and give them perfect timing, or it may happen. Anything can happen here, but based on what I see, there's the risk here compared to the potential makes this a very good trade. I'm going to show you, but the thing is, I actually didn't get into corn quite yet because I'm doing this in the wheat market, and I'm going to show you why in a second. And either one is great. In fact, I probably see there's more reason to believe in the probability of corn happening than wheat, but I want to show you corn right now. Here's the general corn seasonal, and you can see this is a 15, 10, and 5-year seasonal study. And if you look at, wish I showed you the colors here, but the dark here is the 5. The green, I believe, is the 15, but if you look here, you're seeing generally, when we're looking at the area we're in here now, we're seeing in general the general 10, 15, 5-year seasonal is favorable in this time, as opposed to what it was in corn, where the longer term seemed to go down, not up, and it was those 3 out of 4 years that went down, and the 3 out of 4 years went up. In the corn here, we're seeing the general nature of wheat being the other way, where we do see a rise in the price of this seasonally. Doesn't matter how many, 5, 10, 15, you're seeing a pretty impressive tendency on the wheat to go up. Now, if you look at the September wheat chart for 2010, this is proven out here. Big move in 2010. This is the September contract, which is what I'm getting into in the corn. I'm in the wheat already. I'm looking at the corn now, but you're looking here at a big move in 2010 during that period. Here is the 2011 contract. You're looking at September 2011 contract. You're seeing a move up, not that impressive, but sticks with the tendency. This is in 2012. You're seeing the move started right around now, and went up nicely in 2012. And the 2013 was a failure, as you're seeing. It went the other way. So last year was a miss. So if anybody playing on 2 or 3 years in a row and said this has to go, got their stops hit because it didn't happen. So these kinds of things don't always happen, but I like the tendency of this. So the reason I went with the wheat is because I'm doing this with a bigger account, and I can stand a little bit more risk. And here's the wheat chart. Similar looking chart to what I showed you in the corn. This double top that happened in corn was actually seeded the second time. You can almost consider it a double top, but it's a little bit too high to do that. But 1, 2, you have a double top here. Then that was exceeded and came immediately, impressively down to where we are right now. And you can see here, didn't quite get to that bottom in wheat. Actually didn't get as close. So some people may read whatever into that. But here you've got another situation where if I would draw the line, trend line, you're looking at, let's see, drawing trend line, and I know everybody that uses TradeStation, there are easy ways of doing this, but I'm an old-fashioned guy and I just sweat it out. You can see this has not broken quite impressively. Today doesn't look like a very good day so far, but who knows? You can't put any credence into this. Now here's actually, I started accumulating these positions at 597 yesterday. So we're a little bit above that 599, only 2 cents above it. So I'm up a few $100s right now, but this is something that I'm going to be accumulating along the way. Now you people, you traders that are in the Simple Trading Plans course, I'm going to be accumulating this based on Simple Trading Plan number 2, where I'll be adding on corrective moves and then adjustments back to the trend. So people in Simple Trading Plans know what I'm talking about. But the idea here is that I like the fact that we seem to be turning. I don't see any two green days in a row. It's like curve fitting. You start talking your own position. Now that I'm in it, now I'm telling you all the reasons why I'm a genius. Here's 2 up days in a row. We had green bodies, and you haven't seen that this whole thing. And I'm starting to talk myself into myself being a genius, but I could very well be wrong here. The stop here, now the stop is very low here, which is I really like, because I may be I'm constantly looking at this chart for the next month. And what I'm looking at is a place to get started. This is the obvious first place to get started. But if I get stopped out here, that stop, the low is at 5. The low of is 566 and a half. So my stop. Let me refer to where I actually put it. Yes, and so I'm willing to risk from 596 to a tick under here, under this low of the actual move, 565. So 566 from. So I'm willing to, to lose $1,500 per contract here. But again, I'm dealing with a bigger count than maybe some of you are dealing with. So is that right? Let's see. If I'm looking at, if I'm in at 597 and we're looking at 566, that's 15 points. So that's what I'm looking at here, and $1,500 a contract. But look at this potential. If we come anywhere near even $7 from $6, you're looking at a nice $5,000 move there for $1,500 risk and much more. So I wanted to show you this trade because I think it's got some seasonal backing to it. It's got some short-term technicals that make you want to believe that maybe you could get aboard this. But put your stops in, do your own homework. But I didn't want to let this go without showing this to you. Again, do your own homework. If you do this trade, it's because you want to do it, not because I want you to do it. The important thing about it, responsible and successful traders, is that they too take responsibility for their own trades. And I'm showing you what I think made it a good trade for me. But again, I may be able to take a little bit more risk than you can. So take a look. The beautiful thing about this, the terms I've spoken in is in terms of a full 5,000 bushel contract of corn, which is $50 per penny a move. Small accounts can take advantage of this trade at a $500 risk. I'm sorry, at about a $350 risk, because you're only dealing with $10 a tick, not $50 a tick. So 1/5 of those. So you'd be taking a $300 risk here for a potential of making a lot more money, as I showed you first. So this could be interesting for small accounts. It's something you don't have to stay on top of because this is a daily chart. You don't have to watch it minute by minute. But I did want to show it to you because I'm a believer that in global warming, I'm a believer that things are changing. I think there's some credibility in the last 4 to 5 years in corn, seeing this market move higher and join wheat in this local seasonality, in this broader seasonality of going up during this period of time during the summer. So do what you want with the trade, but I want you to have it. All right, that's it for now. Be well and happy trading, but most of all, stay disciplined.